All right, guys. So thanks for joining us today. I know with all the quarantine and the COVID-19, a lot of people have questions about what's going on in the housing market. So if you don't know who I am, my name is Stephanie Lindamood. I'm a real estate agent here in Dallas, Fort Worth. And I have a special guest today. I have the Vice President of American Southwest Lending with me. His name is Billy Holden. I'm going to let him introduce himself in a second. And we wanted to talk to you guys today about what's going on in the market and things to look out for. And so we just wanted to come in, see if we could answer anybody's questions. So feel free to shoot us any of your comments and questions. So Billy, what are you, if you want to introduce yourself real quick and tell us what you're seeing in the market. And I'm going to join us live on Instagram.
Okay, guys. Yeah, my name is Billy Holden. As everybody can tell, we've been in a tumultuous time right now. But the good thing about all this is that the market is very stable for a lot of the quality credit profile people out there. Right now, the government is fixing to back Fannie Mae, Freddie Mac, and Ginnie Mae, which is going to open up some more of those channels. As you guys have probably heard lately, a lot of the credit, the lower credits are they're not actually trying to do those loans right now, but probably by the middle of next week, we're going to be in a whole lot better spot. So everybody just needs to take a deep breath and not panic and believe everything you hear on the internet or on TV. Come back.
You're freezing up a little bit. Hey guys, if you're just joining us on Instagram Live, I am here with VP of American Southwest Lending, Billy Holden, and we're going to be answering some of your mortgage questions today. We're freezing up a little bit here on Facebook Live, but just bear with us with some of this technology. So Billy just introduced himself. We just joined on Instagram Live, and we have some questions. If you guys have questions that you want to ask us, let us know. If you want to type them in on Instagram Live, I'm having some trouble getting in the Facebook comments, but so basically what Billy just said is we're going to be in a little bit better place this next week. Can you tell us, like, currently, if we've got clients in process, Billy, we've heard some stories about mortgage loan guidelines changing mid-process, buyers are surprised, maybe they don't qualify. What are you seeing there? Is it like credit score requirements are changing, and kind of what's going on there?
Yeah, last week when everything started to go downhill with the epidemic, the big investors, the four big investors that are the big servicers, artificially inflated the pricing to where it was not attainable for the lower credit. Well, they have so much business right now, they artificially did that. It doesn't really have anything to do with the market. As soon as the numbers come back and the actual government backs it, it's going to be in a lot better shape. Right now, if you're at a 660 score above, you're pretty much considered a premium buyer. But 660 and below, it's going to be difficult right now.
Okay, so if you're looking to close on your home and maybe you were approved before and have less than a 660 credit score, is that the case with all the lenders right now, or is it just some that you may not be able to get closed?
It's some. If you're working with a broker, it's going to be much more difficult. We, as a bank, have the capability to service the loan. So if we commit to doing it, we will hold on to that loan until these markets subside and the big buyers come back. So if you're out working with a broker, like I said, those are very good people, but just be cognizant knowing that it might change up until the very end, depending on your loan with.
Okay. And how do people know if they're working with a bank versus a broker?
Just ask them the question if they fund their own loans, or is it going to be funding in a different investor's name?
Okay.
If they're working with a broker that says that, you need to double check that to make sure.
Okay. So we're seeing some credit score changes. Anything with our down payment still the same as far as if you're on FHA, you're still putting 3.5% down, VA 0, conventional, you still have your 5, 10, 15, 20% programs, or are any of those changing?
Nothing with the actual, the the types of loans that are out there are going to change due to the circumstances we're in right now, which will pass. It's just affected some of the lower credit. The down payments are going to be the same. The ratios are going to be the same. Everything is going to remain the same. It just needs a little bit of time to get back to where it was.
Okay. And then, like, is there anything we can do as real estate agents, new home sales counselors to prepare our buyers and sellers? So, like, let's say we normally do a simultaneous closing on 2 homes, meaning maybe they have an old home that they're selling that they're closing on, and then they're closing on the new home the next day or the same day. Is there anything that we need to tell them, like, hey, closing's taking a little bit longer, the funding process is taking longer, or do you feel like things are business as usual in that regard?
I would never recommend trying to close on an existing house and then trying to close one in the afternoon, because there's so many things that can go wrong. We do
Right.
it, but
Sure.
we also have to rely on third parties of closing early in the day. They got to get their wire. I mean, there's a lot of things. So if I were a day or so in between the
Okay.
transaction, that's always the easiest and way less stressful.
Okay. And then as far as the closing process, how are you seeing lenders do that virtually? Are they closing them in parking lots? Is it by DocuSign? Like, what's that
Yeah.
process look like right now?
Depending upon the buyer, they come out to the parking lot. They will do the signing right then and there. They'll let you sign all the documents except a couple of the critical ones in person. They'll send it to you and email you, but they can definitely take care of your customers in the parking lot if they're not comfortable coming in.
Okay. And then as far as the loan approval process, I've noticed on some contracts here recently that we've gotten in for some of our sellers, the realtors are putting in a longer, like on the third party financing addendum, they're putting in, they want longer than 21 days to get that approval. Is that real, or is that them taking extra precautions legitimate? Or should we be pushing back and saying, no, you should still get loan approval within the 21 days? What are your thoughts on that?
Yeah, there's no material change in the business file flow that has
Okay.
happened because of all these conditions. The only thing that I would say is on a VA loan, the appraisers are very slow, and so they've really
Yes.
gotten slow now. So that's on a VA loan. I would allocate some more time, but everything else, it hasn't changed.
Okay, cool. Um, okay, when we listen to the media and they say interest rates may go down, the Fed's going to lower the rate to 0%. When we have clients that come in or walk into the sales office and they literally think that the mortgage rate's going to go to 0%, and we have to educate them that that's 2 different things. How do we do that in a way that the client can understand that we're not trying to pull a fast one or we're being accurate? Can you explain what it means when
Yeah,
the media says, hey, the Fed's going to lower their rate to 0 or 1.5%, what that means for, it's different than mortgage rates?
right, right. The when the Fed talks about that, that's what they loan money to banking institutions, real estate investment trust, all that. So that is the benchmark of what they loan the money to them. So the bankers, the mortgage companies, the car companies, the credit card companies can loan out to you. And the difference between the rate that you get and what they're borrowing at is their profit.
Okay.
So the 0% is basically on a much larger level. It doesn't really have anything to do with said when they loan that money, it doesn't have anything to do with the public. It can affect the rates to go down, but you're never going to get down to 0 because that's not going to
Right. Okay. So what are you seeing the rates right now for, 660 credit score higher roughly? Like, I know it fluctuates.
happen. I'm today on a government loan, a government which is an FHA or a VA loan. We're looking at probably 3.25.
Okay.
Um, I mean, it's very strong. It hasn't moved on a conventional loan. It's all credit score driven. If you have a 680 or 700 score, you're looking at probably somewhere about 3.75.
Okay.
So it's at all time lows. I mean,
Right.
this is people need to understand. You can buy a much more much higher quality house, a higher priced house with such a low payment in these times.
Right. Let me take a quick second. Hey guys, if you're just joining us live, whether you're on Instagram or Facebook, thanks for joining us. I'm Stephanie Lindamood, real estate agent in DFW. And we have the Vice President of American Southwest Lending on with us. We're just talking about some changes in the mortgage market, talking about some things people have either heard about, maybe dispelling some myths, just as we're in this midst of COVID-19 and just trying to help everybody out in the industry. So thanks for joining. If you have any questions, let us know, type them in the comments. Okay, so what are things, there's a lot of like stimulus programs out there. There's the forbearance program where if you're currently in a home, you can delay your house payment for a few months. Is there any, there's also like voluntary furloughs that some companies are asking employees that they want to take. Is there anything that you would recommend buyers not do if they are looking to buy here in the next few months? Kind of like we would tell them, hey, if you're about to buy a house or close, don't go buy a new car, don't go buy new furniture. That's kind of, we all know that being in the industry. Are there any new things that I wouldn't think to tell a client not to do that could impact them in the future that they cannot do now with some of the current things out there?
Right. I mean, I'll tell you this. I mean, the mortgage companies have been directed by the government to give the actual payment. You know, you can actually delay it for up to 90 days.
Okay.
But I would tell everybody out there that there's going to be a forbearance that goes on your credit report if you take advantage of that.
Okay.
If you can at all possibly avoid putting your house into forbearance, I would definitely not do that, because that they're going to roll that to the backside of the loan. And if you do have the ability to pay it, I would just continue to pay it. I mean, I know it's enticing thinking that you could go out and spend some money.
Sure.
But I wouldn't do it because
You're breaking up a little bit. All right. So basically it sounds like on the forbearance programs, which means you can apply for that and not pay your mortgage for a couple of months, because it will go on your credit report. You would recommend, if at all possible, going ahead and paying your mortgage during this time so that that's not something that you have on the credit report.
Yeah, because the investors, after all this is said and done, it's not going to affect your credit score, but when they see that you have a forbearance on there, it's going to affect the approvability of the loan. I can tell you right now.
Got it.
So
Okay.
at all costs, try to avoid that.
Okay. Let's talk about, I know, like I've got clients, my husband's got clients, everyone's got clients that are sitting here, like they're in process. They're going to be closing in the next, 2 to 8 months, let's say. And they're sitting there going, we don't know if we're going to, maybe they're essential or non-essential. They don't know if they're going to get their work hours cut or have some things shortened, whether that be, going to work, if it's considered non-essential. What types of things are impacting the mortgages right now? Because I know that there's been some changes on verifying employment and the amount of employment you have very, very close to closing, to where, what does that look like and what's going on there?
Well, I can tell you how we're going to look.
Hang on one second. Go back.
I mean,
you
if
just
at
broke
all
up.
cost, if we look at it, can you hear me?
Yep.
Can you hear me?
Yes.
Okay. If you're getting furloughed, I mean, there's no doubt about it. You can't control that. But if you have an option of an early furlough or a furlough, your volunteer type basis, pack what's obviously your year-to-date earnings. We as a bank, we understand the situation, so we're probably going to take that time period out if you're furloughed and then you come back to the company. But most brokers and most other lenders are probably not going to do that. They're going to take what you made, divided by the months of the year. So it will affect you. So be very cognizant of that. If you do go out there and you do lose your job for a short period of time, it will have an effect on your approvability.
And what happens if you're supposed to close like in the next month where it's real time? Like, does that mean you're probably just not going to get approved, or what are they doing with that?
They're going to make a phone call to your employer. They're going to make a phone call the day of closing if you're approved. And if someone on the other end, which is usually the HR person, says that you're, on a furlough, you're not going to be closing because you can't get that loan done based on that situation. So be very cognizant.
Okay. And then if people are furloughed and they say, hey, what if I go get a part-time job or whatever, delivering or bagging groceries or whatever, and maybe that makes up are they going to be able to use that income
Mm-mm.
if it's fast income? Okay. Because they haven't been
No,
on the job
not
very long.
correct. I mean, the best thing is to try to avoid it at all costs. But I mean, you got to get back to your job. There's no other way around it. They're not going to approve the loan if the furlough conversation comes up.
Okay, fair enough. And then, so let's talk about so we talked about earlier. I want to go back to it real quick. Things to look for in a lender if maybe they aren't in the process of underwriting and all that, to make sure that at all costs the investors don't change their mind at the closing table. It's going to be to make sure that you are with a bank versus a broker, correct?
Mm-hmm. Correct.
Okay.
Because just like I said, people need to know that there's a lot of really good lenders out there that are bank driven. I mean, we've had loans that we closed 2 weeks ago that we can't sell, so we're servicing them on our platform
Right.
until the market comes back. So I just would be very concerned if you go to a different company that has a investment company that's closing the loan in their name, because they have no wherewithal with them to make them close the transaction.
Okay. So in general, what do you think is going to happen? Like, this is what is today, April 9th. I mean, obviously none of us have a crystal ball, but from what you're hearing, what are you seeing when do you think maybe we'll open back up like normal? What is the impact on housing? Like, and what do you think is going to go on in the next 9 to 12
I
months that we'll see as an impact of all this?
I think obviously our daily life with this pandemic is going to change, probably to an extent. 2 months from now, everything's going to be back, because before all of this, things were humming. The market was
Yes.
humming. The
Yep.
defaults were way down. Everything was working out perfectly. So
Right.
this is something that you couldn't predict that this would happen. So I think we're going to start up and we're going to come out roaring like we never have had before, because people have this pent up demand and they need
Right.
to take advantage of these rates, because there's no telling how long they'll be around.
That was my next
So
question. So what do you think rates are going to do as the rest of this year? Do you think they'll stay where they're at just to try to stimulate things, or do you think they'll go lower, or do you think they'll go up?
I think they're not going to go lower. I really don't think
Okay.
that. They're probably going to go up maybe a half a point at the most, because it's just that's how they go. They go up in the summer. So I think by July you're going to see a little bit of an uptick, but I think as of June 1st you're going to be trucking.
Okay. Do you think foreclosures are going to go up, or do you think that this is going to be a situation where it's a blip on the radar? Maybe people have to file for forbearances or apply for forbearances to get some relief, or do you think it's going to be more like '08 where we saw a longer foreclosure period? And
It's going to be a longer
I'm asking
foreclosure.
all
There's
the
no doubt
loaded
about it.
questions, aren't I? Do what?
Yeah. Well, there's no doubt about we're going to have a surge in foreclosures, because we're going to come back, but a lot of the self-employed business companies out there I don't think they're going to be able to make it, and that's going to cut. Right now we're at a 10% unemployment rate.
Right.
We're gonna struggle to get back down where we were pre-corona.
Where
So
were we, like at
it's going to take
4% or
some time, but we're going to have some
3.5%?
foreclosures because people are going to get behind. Yep.
Yeah. Okay. And then what do you think about, like, especially in DFW, we've had so many new apartments being built. There's a ton under construction. Is that is that going to be good for our market, or do you think those are just going to sit now?
Well, a lot of those apartments that are being built are from massive, massive real estate investment trusts that are just
Yep.
placing money. And those big companies, they basically put money where they think the jobs. That's why they have such a big influx. I think the houses. I mean, at the end of the day, I think the payments are pretty close to what you're going to be paying on an apartment.
Right.
So I think it might backfire a little bit on them, but we're going to have a lot of apartments around.
Yeah. Yeah. And then what do you think pricing will do, at least here in DFW? I've noticed I had 4 listings this past week that all got offers. Some of them got multiple offers. I was surprised at how low some of the offers were. Some of them came back fine, but it looks like there's a trend where buyers are thinking they're going to get this great deal. I haven't really seen prices decline that much, but what do you think will happen over the next maybe 3 to 6 months?
I mean, we're the most stable market in the US, and every year we go up about 1.5 to 2.5% is what I
Yep.
see. So we might take a little bit of a, stable because of all this going on. We might not be able to that uptick, but starting in 21 and 22, it's so 3% higher priced housing at that point in time.
Right. Right. Is there anything
So
that I haven't asked that you want to talk about that you think, any myths, any news out there that maybe we're hearing from a national standpoint, but we're really not seeing in DFW to educate the viewers today?
no, I just would want people to know that as we've been dealing with this will pass. And yes, it's had a financial toll on our economy, and we need to get back to work. Everybody knows that. They're just trying to slowly roll it out to make sure our health is in place. Well, um, after that point, I think we're going to be trucking. I think we're going to be doing very well. And there's a lot of negative news media,
Yeah.
but at the end of the day, I mean, it's a great time to buy a house, especially if you want to take advantage of the tax incentives of writing it off on your tax return, both your interest and your real estate taxes you pay. That's a
Yep.
huge benefit. And you definitely need to move forward now and not, there's been a lot of doom and gloom, but I don't think it's going to last long. I really don't.
The other thing I would add, and I'll let you tell me your thoughts. I'm sensing that some of our builder partners are going to probably start limiting the inventory that they build. So I would think that 4 or 5 months down the road, we may not have a shortage of homes, but there may not be as many homes available to choose from that are finished if builders are pulling everything in a bit.
Right.
What's your perspective on that?
Yeah. Well, they're just right now, the builders are concerned because of, they've got a lot of overhead,
Yep.
and they don't want to be stuck with all this out there. I mean, they're concerned. And I know a lot of builders they have stopped building speculative homes, which are homes that are built without a buyer.
Right.
So in saying that, it takes builders 6 to 9 months to build a house. You might be stuck with 12 months.
Right.
If I mean, it's going to be hard. The labor is going to be stretched and all that, but there's going to be a definite shortage of houses, ready to move in houses, without a doubt.
So the reason I bring that up, guys, is if you're thinking you want to buy, think about it like the toilet paper, right? Like at some point we're going to get toilet paper. I don't know when. We just went to Costco today and there's still none. But same thing with houses. So if the builders build a lot less homes that don't have a buyer, which are the inventory homes, then that means that more people are going to be having to either build, buy pre-owned, or wait. And so if you're in the market, this is a great time to catch this window where there's still inventory on the ground. Rates are still really low, assuming you're in a field, where you're not worried about either being furloughed or income's not an issue or that kind of thing. And we're still seeing a ton of buyers that are fine. So what I would say is we're essential here in DFW still. We're still having listings go active. We saw a surge in showings this past weekend. We saw a surge in contracts. I suspect that will back down this next weekend with it being Easter weekend. But are you seeing, how are you like with your loan applications and contracts coming in, Billy? Are you seeing those increase, decrease, stay the same from the last few weeks?
It has increased. So I
Increase.
mean, there's more people out there looking for homes. There's more people that are interested, and of course they have their concerns and questions, but the ones that we're looking at are real cognizant of the rates, and
Right.
they're trying to take advantage of it because they're scared they're going to go up. Well, like I said earlier, they're probably going to go up a little bit, but that's why people need to, as soon as we turn this thing back on, you can go look at homes all the time. You need to go buy a house.
Right. Well, and that's the other thing I tell my sellers is like, look, there's a lot of people off right now and they're on their freaking iPads and like crazy. And with the photos we do and all that good stuff, just like the builders, like they know what we look like, which is amazing. Everyone's got time. And if you've got someone submitting a loan app, you've got someone walking into your model home or making an appointment, or someone coming into one of our listings, it's like when it's pouring or when it's super hot, that means they're an interested buyer to be getting out in this stuff. Because if you're just a looky-loo, your agent's not going to take you out and you're not going to go out, right? Because everyone's just wanting to hunker down. So if you do have traffic and people interested, I think it really means that they're out there and they're real. I think that it's going to behoove the sales counselor or the real estate agent to make sure that they're synced up with the lender that they know can get the job done. And based on the current environment of that client's, what's going on in their work history, that kind of thing, they're secure for the next few months.
Right.
All right. What else? Anything else that you've been answering lately? I know you've been on the phone a lot talking to people that are worried about stuff. If people are comparing this to '08, because I've been in the market since before then. Is this different than '08? Is this going to be worse than '08? What are your thoughts on that? Or can we even compare it?
You're going to have the mortgage world when it has this short-term hiccup. It's going to, it's going to come back and it's going to be very, very strong. It's not like '08. It's not to where they were doing rough loans. The loans have been performing everywhere for quite a while. So it's going to come back like it was before all this stuff happened. So we're not going to have the same response. We're not going to have the same effect.
Yeah, so that's good news. So your advice is just take a breath. Yes, we've done some damage to the economy, but at the same point in time, we all want to be safe and healthy. Try not to take voluntary furloughs if at all possible. Try not to apply for the forbearance programs if at all possible. If you have a lower than 660 credit score, you may need to call your lender and or switch lenders, right? Is the 660
I
credit
wouldn't just,
score
yeah,
an issue
I wouldn't
for you
hop.
guys too?
No, it's not. I mean, I right now I can go down to 600. It's just the pricing on it
Okay.
is not conducive to what a customer would want. That's the problem, is that they wouldn't like the rates right now. A week from now, that's probably going to be a different story.
And tell me why that is again, just in case somebody's just joining us. A week from now, things may be changing for the positive in the mortgage industry.
Yeah, the government, they back these, they're called pools, Fannie, Freddie, and Ginnie. The big servicers of loans, they have too much, and they're concerned that a lot of people are not going to make their payments because of this, this situation with you having a forbearance, and that becomes a liquidity crisis for them. So what ends up happening is if the government backs them and changes some of their guidelines, which they already said that they would, that's going to get them back into the game probably by the middle of next week. So next week's going to be a different story than right now with borrowers below 660 score.
Okay. And then long-term big picture, like how does this impact our average American in like 5 years? Like when we hear about the stimulus, and housing and all that, like, is this going to make interest rates go through the roof in future years to come? Do you think it's going to make pricing go up crazy in future years to come? Or how does this really impact the average American once we're through this with some of the stimulus in these programs?
It's not, our government for a long time has spent a lot of money, a lot more than what on these stimulus packages. Whether we had spent it on this, like 10 years ago, we had Hurricane Katrina. It was $6 trillion. So it really didn't have an impact on the regular average American. So I don't see this having the same. It's going to be very similar. You're not going to feel it. So, and where we were before all this happened, we were in such a heavily upward movement. We'll get back there. And that's why people just need to understand it. There's 24/7 news that's doom and gloom. Just relax and we'll get back to where we were, and it'll be a really, really good situation.
One more last question real quick. If people are in process and something's changing with their job, or their lenders just, said, hey, the investor's not willing to take the loan or whatever, are you seeing the contracts just get canceled, or are you seeing them be on hold with either the builders or the sellers in the pre-owned market? Are
So
they just
far, what I've
canceling them?
seen, yeah, probably 90% of them, they just walk away. I mean, they're
Okay.
done. The sellers, I mean, it's a bad situation. So hopefully that won't continue after middle or the end of next week. I hope it goes away for people.
Okay. Okay. So if somebody's listening, especially in the DFW area, they want to get in touch with you and your company, your loan officers to inquire about a loan, to figure out what they can get approved for. What does that look like? How can they reach out to you guys? What's the best way?
Um, we have, obviously it's just to give us a phone call. We can definitely answer any questions over the phone for you. But we have a website and it's very easy to navigate. It's amswmortgage.com.
Okay.
And if you'll fill out the little questionnaire on there, we'll be right in touch with you. It notifies all three people here internally that are the managers here in our office, and we'll get on
Okay.
the phone and give you many options or see what we can do to help you out.
Sounds good. So that's A is in Apple, M is in Mary, S is in Sam, W is in Whataburger, AMSW
Mortgage, spell out the word
mortgage.com.
mortgage.com.
And I did
Yep.
it on we did the loan app a few months ago for a property and it was super easy. So you could do it on your iPhone. It's really
Yep.
easy to do that. So, all right, cool. Well, thanks for joining us today. I know that we've had a lot of people, including myself, like we're getting articles and reading stuff and hearing about, we had a client that a buyer was buying one of our homes and the buyers actually had 2 days before closing agreed to a voluntary furlough because they didn't know any better and they could still afford their bills and that kind of thing. And when they were closing on our seller's house, they did a verification of employment the day of closing. And like you said, the HR person said, oh, she's on a voluntary furlough. And it was like, sure. The investor's like, I can't do this. What? And so it was a whole big mess. And so, of course, even if that's only 1 out of 100, that's what we all hear about. And so it's just
Yep.
good to kind of get an idea of what's going on, how to mitigate it, what's real versus what's the one horror story out of everything. And then I think to know, I've been pleasantly surprised that the business as usual in a sense, because I really feel like the serious buyers are out. And at the end of the day, we all still have to live somewhere, right? So whether it's paying a
Oh,
rent,
yeah.
paying a mortgage, it's like buying food. I mean, yeah, I don't have to go on vacation, but I have to live somewhere. And so I still think if you're in the real estate industry, it's still a great place to be. Just be safe, wear your masks, that kind of thing. And we appreciate all your insight and for joining us today.
Sure. Just like I said, as I say, this will pass. And if everybody just sits still for a while, to do the social distancing, which is going to be the top probably word of the year.
Yes,
Don't just sit at home, but be careful and keep buying houses because that's the American dream.
absolutely. Absolutely. Well, we appreciate it and we'll talk soon.
Okay. See you guys.